Hello, everyone. Thank you for coming. I would like to request Professor Shailendra Mehta to do the introductions for us today.
It's a real pleasure to invite everybody to this wonderful tripartite event hosted very kindly by the National Institute of Public Finance and Policy, Brookings, and AURO. AURO is the new kid on the block. We hope to do many more such events. It's a recently formed university. I'll just say 2 words about that. Our focus is on creating an environment where we have world-class research and a focus on values. So that is basically the distinguishing feature. Today, we have a very distinguished speaker in our midst who's going to be speaking about a topic that is salient for all of us, especially in India: why we cheat experiments on tax avoidance. Professor Duch has had a very distinguished career. He's currently a fellow at Nuffield College and also the director of the Nuffield Center for Experimental Social Sciences. Prior to that, he was a visiting professor at Stanford, Oslo, Pompeu Fabra, Berlin, and many other places. He was one of the associate editors of the American Journal of Political Science. He's one of the associate editors of the Journal of Experimental Political Science currently, and one of the 3 founders of the European Political Science Association. So we are thrilled to have him in our midst. The ground rules are he will speak for so the seminar is for about an hour. He has kindly agreed to entertain questions at any point, so feel free to interject. And then we will have Professor Shamika Ravi, who will be a discussant, but I will introduce her immediately afterwards. So may I turn the floor over to you, Ray?
Thank you very much, and thank you very much for this invitation. It's an honor to be able to have such a distinguished audience listen to me for an hour, and hopefully pepper me with very difficult questions. So please feel free to interject whenever you want. So this, I've got to make sure this is the. Okay, good. So this is a project that originated with my interest and my co-author Hector Soaz's interest in redistribution and preferences for redistribution, actually. And so the puzzle that we originally encountered was, or considered, was how to understand the extent to which redistribution varies across both developed and developing countries. Why do we find more redistribution in some developed countries and less in other developed countries? Why do we see the same variation in developing countries? And our initial sort of intuition was, well, we could sort of understand this possibly by understanding who is willing to pay taxes and who is not willing to pay taxes in these different contexts. And that was the genesis for this project. It's moved, I think, in the direction of primarily focusing on tax behavior, and in particular tax cheating or tax compliance. But hopefully at the end of the presentation, I'll be able to make this connection between understanding compliance and understanding why we see this variation in redistribution patterns and variations in inequality across different countries. So the point of departure is, or the puzzle here is, what causes cheating, right? Why do some people cheat and why do others not? And the focus here will be on revealed as opposed to expressed preferences. And I think there's I'm a survey research. My early work is almost entirely survey research. So I've looked at a lot of studies that focus on what I call expressed preferences, which you see in surveys where you ask people, do you think, for example, the government should spend more money on poor people? Lots of people say yes. I don't think that's very informative, right? I don't think you can learn a tremendous amount by asking people about whether they like or they dislike redistribution for a variety of, I think, obvious reasons. I mean, one of them being social desirability. It's sort of not considered polite to say, oh no, I don't think we should spend more money on poor people. So I think the way to answer this or address this puzzle is to look at revealed as opposed to expressed preferences. And the bottom line is looking at conventional data is problematic. There are confounding variables, there's social desirability, so we need to sort of move to a different sort of, I think, research design. And I would argue that we need to look at a research design in which you have random assignment to treatment in an experimental context, which I think will help us isolate causal effects and isolate the factors that cause cheating. The strategy I'm going to employ, that I'm going to talk about today, is one in which we use experiments on tax compliance to understand cheating, because these experiments are experiments in which people can cheat. There's a possibility to cheat. Yes.
Just before we proceed, I want to get some clarification.
Yep.
So is cheating a matter of preference, or people cheat to expand their income and therefore they want to consume more? Because the two implications are very different. So when you say it's a matter of preference, then I just like to cheat.
No, I think looking at people's cheating behavior, right, will help us understand. Well, is that an expert? No, you're right. I mean, I think people may have a preference for redistribution, but in reality, their behavior is orthogonal to that preference. That's entirely possible. Absolutely. So I'm simply looking at behavior, right? I'm not, and I absolutely believe that the two things could be orthogonal, right? Absolutely.
So there is no cheating type per se.
Well, no.
So it's not that there are cheaters and there are non-cheaters, and the cheaters cannot help themselves.
I actually do think there are types, actually. I do think there are types. I think there are cheater types. But I think cheater types, I think, could express a preference for not cheating.
Yes.
Right, absolutely.
The hammer is
right. But I think that's a good point. I mean, I do think that I'm moving in the direction of thinking that there are cheater types as a result of this research. I mean, yeah.
In an economic way of thinking, we would put an emphasis on the probability of getting caught, the magnitude of punishment,
yes,
and some coefficient of risk aversion. That would be an econ story about cheating.
Right.
And then later on top of that, you could perhaps tell a story about the distribution of preferences. So some people are more risk averse, some people are less risk averse. How would you incorporate cheating in preferences?
How would I incorporate cheating in preferences?
How would you disentangle it from the distribution of the risk aversion parameter?
Let me present the simple effort to sort of illustrate this in a simple equation, and maybe that'll clarify it. I'm going to do that in a minute. I think it'll clarify it. So why do we have compliance, right? Why is there compliance, particularly with respect to taxes, when in fact in many cases the probability of getting caught is zero, right? So particularly people, for example, in the U.S. context who who are self-employed, right? Presumably also in the Indian context, right, where it's self-reported income, right? In many contexts, the U.S. being one of them, the probabilities of getting caught if you cheat are very low, right? So an expectation, you probably should cheat, right? Well, I mean, I think the conventional explanation for compliance or non-cheating is intrinsic motivation, right? I mean, I think that, or reputation. So I think there's this work out there by Posner and Benabou and Tirole that there are these norms that help us understand compliance to taxation, right? Either intrinsic motivation, there's some intrinsic payoff from complying, or concern with reputation. And I think there's some evidence out there to suggest this may be the case. So I think Besley has this sort of interesting article where he looks at the introduction of the UK poll tax, and he uses a sort of a simple RDD design to sort of illustrate, to I think sort of suggest that when people think taxes are excessive or inappropriate, then that undermines this intrinsic motivation, and then you end up getting less compliance. So I think there's some evidence in that in that those analyses to suggest, in fact, maybe this intrinsic motivation matters. There's some interesting field experiment work by this woman at Princeton, Del Carpio. She's done some interesting tax field experiment in Peru, where she basically a framing experiment where she presents some pretty reasonably convincing evidence that when you evoke these intrinsic motivations, people are more likely to comply with taxation. So I think there's some evidence out there to suggest that that maybe intrinsic motivation matters. So maybe, in fact, we can explain tax compliance with this Mother Teresa sort of warm glow feeling, right? I mean, the intrinsic motivation. Maybe that is actually driving people to comply. Or maybe it's reputation, right? And maybe there's these, very rich guys out there who want to sort of signal that, they're good citizens, that, well, tax me more, man. So maybe it's a reputation reflex. But what's sort of interesting, and what's going to interest me here is trying to understand or sort of unpack the compliance or the non-cheating strategy, and that is what I suggest in the paper is that we look at the utility from complying with taxation. So X sub I in that equation is basically declared tax income, right? And the utility from declaring your tax income for tax purposes is a function of P sub I times S sub I. P sub I is your performance, S sub I is your salary, right? So that gives you your sort of total income, right? The product of your salary and how well you perform, minus your taxes, whatever you pay in taxes, which is going to be the prevailing tax rate times how much you declare, and it's that last term that I'm trying to sort of understand in these experiments, which is beta times T times X sub I raised to the 1 over P sub I, and it's that exponent that I think captures what I think is going on with tax compliance. And basically, what I'm going to argue is that the P sub I term helps us is a major factor contributing to tax cheating at the individual level.
You have to explain.
Okay.
P sub I, because this is salary.
P sub I is performance. Salary is SI is salary, right?
Utility isn't it just on salary? Why does P sub I come in?
Well, it's like think about it as a wage rate. As a wage rate. So think about this as piecework. So yes. The more I produce times per piece production. Okay. That's the way to think about it. Okay. So P times Q. It's better to think about it as P times Q. Okay. Yes, you can think about it as P times Q. But P is the critical element here, and in that last term, basically what's happening there is what the exponent does in that last term is that it reduces the payoff if you're a high performer. So the more high performance or the more effort or the more ability you're associating with a particular task, right, the lower intrinsic payoff you get from tax compliance. That's what I'm trying to capture in that equation. And so the conclusion to draw from that sort of simple representation is that high performance types will cheat more than low performance types.
That's built into the assumptions.
That's my conjecture.
Okay.
So that last term in that equation is my conjecture, basically. It's this notion that as your performance type increases, right, the intrinsic benefit you get from tax compliance declines. That's the entire argument of this presentation. And so what I'm arguing here is it's not so much how much money you have, although that I'm not saying that's irrelevant, but what really matters here is that if you're a high performance type or if you have high abilities, right, then you are uncomfortable or antagonistic to having those earnings taxed or taken away from you. If you're a low ability type, you're much more comfortable with it. So what I'm going to try to convince you with this experiment is that I'm able to tease out that effect. That I'm able to demonstrate that, in fact, the explanation for cheating is ability or effort.
So if I'm an investment banker,
You cheat.
you cheat.
Absolutely.
But if I'm a ditch digger,
You don't cheat.
So if I've inherited a lot of wealth, I don't have a tendency to cheat.
Say that again?
So if I've inherited a lot of wealth, then your model would say such people should not have any incentive.
If you've inherited a lot of debt,
Well,
I'm sorry. Exactly. No, absolutely. Absolutely. It definitely has, it's definitely tied to your performance type, right? Now, I would argue, I mean, part of the interesting task here is disentangling wealth and performance or ability, because obviously they're highly correlated. I'm hoping that I can convince you that I've disentangled that here. But the argument is that that performance component is a major contributor to cheating.
Could it be that cheating requires a certain amount of ability as well? It's not easy to cheat, particularly when...
No, although in this, you're right. And I mean, I think, obviously, you have to be fairly clever or be able to identify the right accountants in order to cheat in many tax regimes. But here I'm able to, because of the way I've constructed the experiment, I think I'm able to control for that. I think that's the attraction of this experimental setup. But you're right. Yes?
Does it also have to do anything with visibility? So when your income increases, your visibility...
Absolutely. I mean, I think there's strong multicollinearity here. I think it's difficult to disentangle, particularly with observational data. I'm going to try to sort of convince you that with these experiments, I'm able to sort of disentangle the two. Yes.
Would there be a cost involved with cheating as well? Because on companies, you will have to say, for example, drive, or any other cost that goes into, how would one be able to do this cheating part?
How am I going to do it?
Yeah.
Well, let me show you. I'll show you. Hopefully I'll convince you that I've done this. I mean, I'm not sure that. So let me just go over the basic hypotheses here. So my conjecture is that ability and effort result in cheating. Money per se may not affect cheating. Performance, which is equal to ability and effort, helps us understand cheating. Why? I'm not quite sure, right? It might be a function of entitlement. So it might be the fact that people who are high performance types feel that they have this entitlement, that that they're smart or they have these high abilities, and therefore they ought to be able to retain their income or their earned wealth. It might be that there are these personality types out in the population, and I am moving in that to somewhat in that direction. And there've been a number of recent published articles, economic articles, that sort of suggest this may be the case, right? That the population consists of types who cheat or lie and types who are uncomfortable about cheating and lying. And I think I think to some extent, this is what I'm finding here, although I would argue that the types out there in the population who are comfortable about cheating tend to be those who are successful, have high abilities, or tend to be sort of very, perform well.
Seems to suggest that the cheating is entirely dependent on the taxpayer and not on the tax administration of the system.
You're absolutely right. Obviously, there are, I try to deal with that here because, as you'll see, in this particular experiment, the probability of cheating is 0, right? So I don't deny the fact that things get a lot more messy once you add audits, once you increase the costs of cheating. But in this particular sort of,
For instance, what I'm saying is level of taxes.
Absolutely.
Tax requirements. So you are saying all those you are assuming to be.
I'm trying to control all of those, right? So I am just trying to isolate this one factor. That's what I think is the sort of the beauty of experiments, right? I mean, and the fact that I think I'm able to sort of, through random assignment to treatment, I think I'm able to control for all those other factors. Or at least I hope I can convince you that I have. So maybe money doesn't matter. Did Armstrong really cheat for the money, right? I don't think so. I think Armstrong cheated because he was very competitive, he was very successful, and he figured that he could cheat, right? That he could take drugs, and that there was nothing wrong with that, right? And I think it's a function. Again, I think it's sort of it's a characteristic of people who are very successful, very competitive, and have high abilities. So an alternative argument here that I think is out there in the economics literature is that, well, the rich, when you become rich, you become greedy and unethical, right? So it's a function of wealth, right? The rich are greedy and the rich are unethical. And that argument is basically that money per se makes people greedy or unethical, right? There's some psych studies. This Piff et al. One is quite a famous one that's often cited, particularly in the press, that does these psychological, that does these experiments and suggests in fact that there is some evidence. They do experiments with using rich people and poor people, and then they look at the cheating or uncooperative behavior of the rich versus the poor, and they do find that the rich tend to be more greedy and unethical. Right? There's this classic study out there by Blanco et al. About looking at data on shoplifting, right? And there's no doubt, it's quite clear, right? The rich people are more likely to shoplift than poor people. They're just more likely to, in spite of the fact that obviously they probably don't need to. So there is this evidence out there that there is this correlation between unethical and greedy behavior and wealth, right? And then, of course, there's this famous New York sociologist who, has this famous quote, right? Only little people pay taxes, right? As she went off to jail, right? So, I mean, that's a possibility, right? I mean, there is this possibility that is simply correlated with wealth. So I entertain that as a hypothesis in the design. There's also this argument out in the literature suggesting that, well, maybe there's cheating, but maybe it's conditioned on whether earnings or returns to wages are a function of ability versus status, right? So Alcina has this argument about along these lines. And so the notion here is that intrinsic payoffs are somehow conditioned on beliefs regarding returns to labor. Right? And where returns to labor are determined by non-market forces or luck, the rich comply, right? Where returns are determined strictly by ability, the rich do not comply, right? So this is this is possibly going on, and I'll try to explore this as an alternative explanation in the experimental design. Yep.
But there's no role of competition to cheat. So there are two builders, and one of them cheats and is able to offer in the market at a lower price a house, then the non-cheater would be sort of compelled due to competition to also cheat.
Yes.
Right? So there's a peer effect in some sense. I mean, competition then would lead to, I would imagine, more and more people
Cheating.
cheat.
Okay. I mean, although, so let's think about the tax situation. Why would that, how would competition result in more or less compliance in a tax context?
Well, if somebody is trying to show higher returns, to his investors, and they're trying to avoid taxes. And in this case, I mean, the housing example I took, because there are several examples. We interviewed a lot of builders. They said, the other person is being able to offer at a lower price a house. So if I have to pay higher taxes, I'm not able to do so. So, and taxes could be on inputs, on a variety of things.
Right.
It's not about income tax alone, but it could be if you're buying things from the market, you have to pay indirect taxes.
Right.
So they buy directly out of cash or they want to avoid it. Custom duty, for example, people don't want to pay, which is also avoidance of tax.
Right.
So over there, you will have the model that this guy does not cheat, but it's sort of competition just to be in the market.
He has to cheat.
He has to cheat.
I think I capture that in. I think I capture that in this in the next. I think the next or the last explanation I entertain here. I think I capture basically there are costs to compliance. And I think that would fall in the cost of compliance. I mean, obviously, not necessarily obviously, but it is. I do entertain the notion that as the cost of compliance rises, which I think is sort of what you're getting at, you will see more cheating. So, I'm trying to sort of control for that in the experiment. But I agree. I mean, so the cost of compliance. So obviously the demand for these intrinsic rewards are downward sloping, right? So as the price of compliance rises, right, which can be a function of earnings and tax rates, right, cheating will increase. And I think that sort of I think that falls in the area that you're talking about, right? If you're a builder, right, your shareholders might expect certain returns, right? And if you don't cheat, those returns will be too low, and there are economic consequences. So I'm trying to capture that by entertaining this other possibility. So nevertheless, even though I entertain this notion that the compliance compliance will drop as the cost of cheating rises, I still think there will be a performance effect independent of that. Okay, and I think that's challenging, but I try to capture that in the experiment. Finally, another possibility is that cheating is conditional on the nature of the tax regime. So it may be the case, I don't believe it, but others do, and it was a constant sort of argument that I faced when I presented this earlier. Tax cheating may be conditioned on the fairness of the tax regime. So it may be the case that you have low cheating, for example, when redistribution is highly progressive, right? So taxes are doing a good thing, right? And so that may encourage compliance. And you may find high cheating when redistribution or taxation is highly regressive. So that's another possibility that I try to entertain in the experimental design. Yes? Yeah?
So do you find empirically that the first generation businessmen are bigger cheats than the second generation or third generation businessmen? I mean, so where I'm coming from is there is a great deal of literature in sociology which is crooked ladder to success.
Right.
It studies mafia, cheating all the time, but once they made it, their hope was that the second generation and third generation were all in legitimate businesses. And so I'm wondering that is there an empirical work that looks at
that may be going there, I don't know. But I would argue that So my little contribution here is only to say that the first generation who do very well are typically very competitive, high performance types. They definitely will cheat, right? The second generation, this is total sort of conjecture on my part. I mean, the second generation are probably less competitive, less aggressive, and maybe have, because of regression to the mean, have less abilities, right? And therefore probably cheat less. That would be my totally off the cuff conjecture. So I start the presentation of evidence here with an analysis of some conventional data. So these are data that are collected by the World Values Project. They've been collected over 6 waves, so I think over 30 years, maybe more, and maybe 100 countries, right? And they ask this question in each of these surveys, please tell me for each of the following statements whether you think it can always be justified, never be justified, or sometimes in between, cheating on tax if you have the chance. And the answers are on a 10-point scale. 1 means never, and 10 means always. Okay, so this data set is conventionally used to measure what economists call tax morale, right? The enthusiasm at the individual level to comply with taxation. Of course, given my first set of slides about revealed versus expressed preferences, I don't put a tremendous amount of value in these data, but nonetheless, I think they're sort of suggestive. And the results are, I certainly can't see that. I don't know whether you can, but I will summarize it. So all I did was I took that question for all of those countries, and those countries are surveyed multiple times, and I regressed that question on some demographic control variables and income, right? And all I've plotted there is the coefficient on income. And what's clear in most of those countries, although you may not be able to see it, is that in most of those countries, the coefficient is positive. And the higher your income, the more likely you're willing to express preferences for cheating, right? Or to indicate that you think cheating is acceptable. Right? Now, there are some outlying countries in there. So those are the top countries. They tend to be, I think, mostly developing countries. No, I think I can't see the country, so I shouldn't comment on them. But those are the high the countries with high values on the coefficient, and those are the countries with low values on the coefficient. I think the low values tend to be developing countries. I know China's there since I just presented this in China. People noted it. So the takeaway from these data is that rich people in lots of countries, right, are much more likely to favor cheating on taxes than poor people. So it's a point of departure, but it's not a particularly rigorous one in my opinion. So how do I get more rigorous data here? Well, I conduct these tax compliance experiments. These are conducted at the University of Oxford at our Center for Experimental Social Sciences. We hope to soon be doing the same experiments here in India shortly in a similar lab, probably a nicer lab. So these are all done with Oxford undergraduates. And the tax compliance experimental design is quite simple. It's a tax compliance experiment with real effort tasks. There are 3 different tax rates that are used: a 10%, a 20%, and a 30% tax rate. These tax rates, are fixed at the group level. Taxes are redistributed equally amongst group members. So there are 4 subjects in each group. Once they earn their money and once they're taxed, those tax revenues are distributed equally among group members. So that's a public good. There's no excludability. There's no social gains, no social losses. In the data I'm going to talk about today, there are no audits or fines, so you can cheat as much as you want, but you won't get fined. There are 10 rounds in the experiments. Individuals are paid at random for one of the rounds. So they play 10 rounds, and one of them is selected at random to determine their payoffs. Typically, they earn between 8 and 15 pounds per session. The groups are fixed with four participants, and there's random matching at the beginning of the session. So the design for each round, so there's a real effort task. Subjects are asked to solve as many additions as possible in 60 seconds. They're asked to add 2 random 2-digit numbers. So they see a number, a plus sign, a number, and then they have to add. They give the sum, and the faster they add correctly, the more money they earn. They're told after each round how much their gross profit is before tax. They then are asked to declare their income, which they know will be taxed. They are then told on their screen what their net profit is after tax and after redistribution. So of course, the taxes are subtracted from their profit, and then they are added whatever redistributive taxes the group earns or generates. Their earnings are all differentiated by profit, tax, and redistribution. So they see that on the screen. So the experiment to capture some of these arguments that I was talking about earlier has 4 treatments.
By the way, this is crucial. So apologies, this went
Yeah.
very quickly. So may I?
Absolutely.
May I
Yes, you should ask.
My understanding.
Yep.
This is correct. Then really the crux here is the differential ability which is expressed by their addition prowess.
Absolutely. That's performance. That's P sub I.
Okay, that is P. Okay, and then so that is your ability, and then the quantity. So that is
S sub I.
S sub I is the same for everybody.
I'll talk about that in a minute.
Okay.
But that's a good question. So there are actually, I say there are 3 treatments. There are actually 4 treatments. One is the baseline treatment. And in the baseline treatment, all members of the group earn 150 experimental units per edition. So that's Q sub I think is what you would say.
Yeah.
Right. There's another treatment, which I call the status treatment, in which 2 members of the group are randomly assigned to a high salary category, and they earn 200 ECUs per edition. And then there are 2 members who are randomly assigned to a low salary condition, which is 100 ECUs per edition.
It's not really salary, piece rate is what.
It's piece rate. Yes, it's piece rate. Yes, salary is probably the wrong term. Okay, and there's a third treatment. Oh no, so status is determined entirely by random at the beginning, right? And it's fixed throughout the 10 rounds. You're whether you're in the high salary group or the low salary group is fixed throughout the session. So that's the status treatment.
Wait, so status is different from ability.
Yes. So the reason for this treatment is to capture to see whether a strict ability treatment, which is the first one, differs from a treatment in which some people are, through status, they get some extra money. They are clearly,
That's the silver spoon they come with in their minds.
yes, it's chance or luck.
Okay.
Right, exactly. You can think about a spoon in your mouth. Yes.
It's external income that comes in like manna from heaven, and
Yes, whether you are in the high salary is totally by chance.
by chance.
And whether you're in the low is totally by chance.
And status is different from salary, from the piece rate.
No, I'm labeling this treatment as status, right?
Okay. So high piece rate is high status.
Yes, exactly. Yes,
Okay.
yes. High piece rate is high status. Low piece rate is low status. Whether you're in the low piece rate situation or the high piece rate situation is totally by chance, though. So that's what I call the status treatment. And just to be clear, none of these labels are employed. People are told they're in type G or type Y. I never use the term taxes. I use deduction. So the framing is as neutral as possible, right? Then I have a shock treatment, which may be more like the manna from heaven, which you're just suggesting, which is after each round, half the subjects are randomly receive a bonus of 150 experimental units.
What is G and Y again? Type G and type Y?
That's what I call high salary is type G. In order to not frame, I just use these very sort of neutral terms, G and Y, right? You're not told you're high status, right, or high salary, right? You're just told you're in type G, you receive 200 experimental units.
So they don't know that there is another type?
They do know that. They do know there's another type, yes. They're totally informed there's another type, yes. They are told there's another type G that makes 200, yeah.
There's no reason to believe that G and Y have some inherent anarchy.
I don't think so, but but I don't know. I mean, I'm not. It could be. So the shock treatment is, again, that is clearly manna from heaven, right? It's just you finish doing your work, you get your money, and then the computer says, oh, you've been randomly, or you have just earned a bonus of 200 ECUs. And then there's a fourth treatment that I will talk, that I don't have a slide for, but you will see the results for, and that is what is the last hypothesis that I presented, which is this notion. I introduced redistribution. So notice that in all of these cases, the tax revenue that's collected is distributed equally to the 4 members of the group. In the redistribution treatment, the tax revenues are the poor earners get more tax revenue than the high earners. So there's redistribution. So those are the 4 treatments that I'll talk about. Those are basically the sessions. There were 3 baseline sessions, 4 status sessions, 4 redistribution sessions, and 3 shock sessions. And notice that the tax rates vary across the sessions. So in one session, the tax rate was 10%, another 20%, another 30%. Okay, so let's get to the punchline. So this isn't the punchline, but it gives you some sense of how people behaved in the experiment. About 2/3 of the subjects cheated virtually all of the time, which is what you'd expect. I mean, so that's sort of, that's sort of encouraging, right? People understood, people knew there was no penalty, they cheated. About just over 10% never cheated. These results. So I mentioned that there were some economic papers out there looking at lying and looking at types in the population. This is not too inconsistent with their findings, right? I think they had slightly lower lying types, so closer to 50, and slightly more pure non-lying types.
So in this experiment, though, we found that 2/3 were congenital, always cheating. 1/10 were always truthful, and 1/4 roughly were
in between. Yeah. Yep.
rolling out.
Yep. And this basically tells you, I've categorized the types by treatment into whether they always cheated, sometimes cheated, or never cheated. And so what you can see is that across the four treatments, you get similar patterns, right?
So there are 10 rounds, right?
Right.
So presumably, does the cheating increase over time?
Yes.
As you would expect.
As you would expect. The cheating increases over time.
Because
Yes.
they know that there is no penalty, they sort of don't believe it initially.
Right. 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 What?
Would you call it learning or learning?
I think it's the same thing you see in public goods games, right? I mean, classic public goods games, right? I mean, you see people cooperating at the beginning, and maybe they, right? And you say a fall off. Part of it is sort of signaling, maybe, if you cheat, if you cooperate, other people cooperate, but eventually, right, you see that, yes.
I'm not economist. So
Good.
I'm a computer scientist. So for me, when you're doing this kind of experiments, I'm just trying to understand that how realistically they represent the problem which you're trying to address, real tax evasion. Because for me, if somebody is doing this experiment and I'm part of that, I will see that as a gain. So my objective will always be to get as much money as I can. So that is a kind of a disturbance which I'm putting into the system. Right? Because I don't even, there's no moral, no connotation whatsoever, other than that I have to just win the game.
Absolutely.
So I will go and do the cheating, what you call it, cheating.
Right.
So how do you correlate from these games to the real behavior out there?
That's a very good point. So I don't claim necessarily with this result to be able to explain exactly what's going on in the world. I think I've identified a pattern, right? Some people cheat here and some people don't cheat. It's interesting to understand who are the cheaters and who are the non-cheaters. There's a variation, right? So that, and I think it does tell us something. I should point out that there are some classic tax studies out there using the IRS at some point made available to researchers a large data set of US taxpayers. And they looked at the rates of cheating and compliance amongst US, these are people who self-report income, right, obviously. And my results, at least the pattern of percentage of cheaters and non-cheaters corresponds very closely to their results. So, I mean, that's the only sort of benchmark I can suggest here. But I agree. I mean, I think I'm not, with this one piece of research, suggesting that I'm absolutely got everything correct about the real world. But I do think the variations that I capture here do reflect probably what's going on in the real world. But I think in order to really sort of nail this, I would need to go out to the real world. Think of a clever way of designing an experiment in the real world. So I don't disagree with you. Yes?
Did you find that the people who were less fortunate, when they found their part of the other people in the group were earning more than them, did that trigger off more cheating? So there were two,
Oh, I see what you're saying. So you're suggesting that in groups where there was more cheating, did they follow the cheating behavior of the other participants? No.
In the group where there were two wage rates.
Right.
One was fortunate, one was not.
Yes.
Did the less fortunate, when they found out that there was unfairness in the system, did it trigger off cheating?
Absolutely. I'll show you the results. I mean, that triggers off aggressive cheating. So right. So right.
Yeah, so can it become like over the time, this fear of losing reputation might go up when cheating become a pride, and how much full I can make government?
Right. Right. It might, except everything's anonymous here, right? So reputation shouldn't enter, right? I don't think.
Question. Always, the category of always cheating. Does the study cover the other parts of life where they're also cheating?
No.
Who's cheating on
Right.
which will cheat?
Right. It doesn't. I just did another study, another experiment in Chile where I tried to look at that, because I think you're right. I think to really sort of nail this down, it would be interesting if you could discover that cheating behavior in different contexts. So what I did in this other study is I did this experiment, but then at the end, there is, I forget who it is, but some very famous economist has done some interesting experiments where that are designed to detect lying. Now there's what?
That is facial, hyperfacial.
No, I don't think so. No. So there's a lot of stuff where people try to, and my colleague at Nuffield, at Oxford, Johannes Abler, has been looking at it. People have done these dice experiments, right? Where, people are asked to, in private roll the dice and then report how, what happened. And of course, you can infer by the sort of aggregate results the amount of lying that's going on, right? Because of course, the dice are fair, and you know what the expectation should be, right? So there's some really interesting work done on that to identify liars. Some people have done some other experiments where they give people opportunities to lie, and I exploited one of those experiments, and I did my experiment on tax evasion, and this experiment had nothing to do with taxes. And then I administer that experiment to the same subjects. And I've not analyzed the data yet. But the idea, I'm trying to do exactly that. I'm trying to sort of see whether you can present the same subjects with different sort of lie opportunities and whether you get consistent results. Another interesting suggestion that was, so one possible explanation here that's not consistent with my argument, that's possibly going on, is that maybe it's just greedy behavior. And maybe it's just greedy people, right? They go into the game and they say, oh, I'm greedy. It has nothing to do with performance, but it's greed. And I'm just going to put a lot more effort in here, right? And in order to get the money, right? So maybe it's not a sort of performance type, right? But rather it's simply there are these greedy people out there, right? Who come into the experiment, know that they can earn a lot of money, right? And they put in more effort. One thing I can do that I've not done is simply, it'd be interesting to look at what happens to my high performance types when they do poorly. Obviously, some of them will do poorly on a couple of rounds. So it would be interesting to look at the high performance types and see whether when they do poorly, do they still cheat just as much, right? That I think would be sort of interesting, sort of further evidence that it's a personality, it's this performance type that's driving the results, right? Which you haven't seen yet. So the punchline is the next slide, which is really this is the cheating as a percentage of earnings evaded by treatment. Okay, I can hardly see the screen. I should admit that. So as you can see, the dark line is the low performance type, and the light line is the high performance type. And in all of the four treatments, right, you consistently see that the high performance types are cheating more than the low performance types. So that's pretty robust evidence that the performance argument is working, right? That there's something about being a high performance type that results in more cheating and less compliance. I should point out, high performance types are defined as everybody greater than the mean performance rate. So, and the mean performance rate in these experiments is about 12 correct additions in 60 seconds. And so anybody sort of above that is in the high performance type. Anyone below that is in the low performance type. So just the basic treatment effects, right, compared between the low and performance types, I think are pretty persuasive evidence that performance matters, right? What we then do in the paper is that we look at multivariates, and I'll just summarize quickly. What do the multivariates tell us? Well, they tell us that regardless of the treatment, regardless of whether you are in the high or the low status condition, you cheat more than the low performance types. I mean, that's persistent. Now, as you can see, if you look at that blue line addresses your point about if you're in the low status treatment, and you know this, right, and you're a high performer, you cheat a lot, right? Which is not surprising. The green is the high status, and then the red is the baseline condition. Now, You see this in all of the multivariate results. These are predicted cheating rates or likelihood of cheating plotted against the number of real effort task correct answers. So this is in, so the first I should just preface this, the first presentation is for low cost conditions. In other words, where the cost to you of the tax is relatively low, right? So the cost of compliance here is relatively low. In the next figure, we look at the situation where the cost of compliance is quite high. Again, you consistently see this positive relationship. The one interesting glitch, from my perspective, unexpected finding is that in this condition, you actually do see some support for this notion that maybe high status individuals are cheating a little bit less. So this is the sort of notion that this is the Alessino argument that maybe if the cost of compliance is high, although this doesn't entirely make sense to me, if the cost of compliance is high and you have some luck associated with your income, right, then you're somewhat more likely to comply. So there's a little bit of evidence, not I would say dramatic, but a little bit of evidence in favor of this ability versus status argument. The other figure looks at the shock condition. And again, do people who get this unexpected shock, positive shock in income, do they cheat? Do they comply more than the people who don't? No evidence of that. And this is the high cost version of that. Again, no evidence of that. The last hypothesis that I put forward that I'm not going to present, I don't have the data to present here yet, here is this notion that maybe cheating is conditioned on whether taxes are progressive or regressive, and there's no evidence of that in the multivariate. So the bottom line is I think this result is very robust. And in my last couple minutes, I'd like to just sort of present some exploratory results that we got. These are results from Chile. Again, I've presented this in a number of contexts where people have made the same claim to me. Ray, this is a bold claim, this notion about performance and cheating. If we're going to sort of think that this is happening in the real world, you need to go out of your, the confines of your lab at Oxford University with sort of a very unique group of undergraduates, right? And so I'm trying to do that. So this is looking at the same, I've conducted these same experiments with much more average subjects from Santiago, Chile, and the punchline there is exactly the same, right? Yes.
So from a welfare point of view.
What?
From a welfare point.
Right.
Welfare point of view, should we allow the high performers to actually cheat? Because they add value to society.
Absolutely. I think it's an interesting problem, which I think, which I briefly address in the conclusion, but I think the challenge for tax authorities is to think about, first of all, is to recognize that high performance types are very likely to cheat. To ignore this is to sort of ignore, gravity, right? So if you're living in a world where you think high performance types are not going to try as best as they can to cheat, then you're not going to get money from them. And that's the interesting sort of I think message from the Zuckerman book, right? As you think about the U.S. economy, right? Who's generating lots of income in the high incomes in the U.S. economy? Highly talented people, right? In IT or performers, right? These are very competitive, high ability types, right? My results suggest they're not going to cheat. They're not going to comply. They're going to cheat, right? And Zuckerman's book suggests, in fact, that's what's happening. If you look in the U.S., as technology has made cheating easier, right? Because funds are much easier to sort of shift from different tax regimes to other tax regimes electronically, right? Over time, you've seen a dramatic increase in the amount of tax avoidance in the U.S., right? And I think most of that is coming from, and that his book confirms that, most of it is coming from these high performance types, right? And the challenge for tax authorities, I think, is not to ignore the fact that there is this sort of basic sort of personality characteristic, but try to figure out how to induce, persuade, right, these individuals to comply. What they should not be doing is what many of them are now doing as a result of very simple-minded field experiments, right? So, particularly in the UK, where, you know, there have been these efforts to sort of, for example, nudge people to comply with taxation by basically appealing to these intrinsic preferences. Well, the problem with that is it's going to have these very unintended consequences. The people who are going to, for whom these nudges or these sort of appeals to intrinsic preferences, the people who are going to respond to these are poor people. They're the ones who are going to start paying more taxes. They will have no effect on the rich people. Their intrinsic preferences are not going to be sort of engaged by these efforts to sort of nudge people to pay more taxes. So the weird or the sort of unintended consequences might be, in fact, that you're increasing income inequality, right, by encouraging people to pay more taxes. So I think you need a much more nuanced and I think complex understanding of tax cheating than I think we currently have, right?
But the difficulty with this result, if I were to take this, you know, your result and do a back of the envelope calculation, and if I were really to catch people with 100% probability who are avoiding taxes, then your result will actually say that society's welfare comes down because these high performance people who are sure that they're going to get caught now don't perform for society. So the overall returns to society that you're trying to catch these guys, you might get them once, but it's like
absolutely. I mean, I think I think it's a complex problem that you have to think about carefully, right? Because obviously they have all, you know, they have alternatives that they can, you know, I mean, they don't have to, you know, they don't have to stay in a tax regime, right?
No, the problem is that if it is so performance related, you know,
right,
people are cheating, then any effort to catch these guys is distortionary and therefore very expensive for society.
No, I agree.
I mean, there's no lump sum tax that you can redistribute
without
affecting the efficiency.
I agree. Right, I agree. It is disturbing, yes, but I mean, it's. I mean, you know, reality sucks, right? I mean, it's what's going on, right? So, but I do think you have to recognize that.
I have a question.
Yeah.
This is not directly related to this paper, but you additionally, alongside these results, observe gender effects, you know, in the extended scheme.
Yes, I don't present it in this paper. But we do look at gender, and gender matters, as you might, you know, I mean, I think, you know, when I say gender matters, I'm going to stop there because I forget actually exactly what the results are, but
he chooses to forget.
No, I do not choose to forget. I've not, there are a number of other interesting measures that we incorporate into these experiments that are not presented in this paper, and so I've just sort of not been dealing with them. So one of them is gender effect, which the other is, and maybe this helps to get at this type problem, which is we also administer these other regarding preference games as part of this. So we do a basic dictator game. We have some basic psychological indicators that questions we ask. But to be honest, I've actually not looked at these data for a while. But I do know that other regarding preferences and gender do matter. So there's some interesting other complexity to this that I've not examined.
So may I now request Shamika, if you would share with us your remarks, but briefly before she takes the stage. She's had a very distinguished career so far. She's a fellow at Brookings, professor at the Indian School of Business, a faculty affiliate at NYU, widely published and widely cited. So the floor is yours.
Thank you. That was very flattering. Ray, I've been part of the experimental family out of NYU. I trained under Andy Shorter. I ran a lot of his experiments. In fact, I was the guinea pig in several of them. But we were very careful in running some experiments with undergrads and some with PhDs. And I think to answer your question, sir, about whether people are just gaming it because it's a game, sometimes it's also good to just vary, as you have done in the Santiago. But I think what is compelling about this study is that there is a systematic relationship between performance and compliance. And in all these different interventions that they have done, that result comes out, very robust. So I'm extremely impressed by this study. One thing though, the downsides of having your spouse in the room is that he's pretty much thought of everything that I was going to pick up intergenerational.
He read your notes.
Probably intergenerational. There are serious implications because many countries, and this is particularly in the last 4 or 5 years, and specifically after the book on inequality that came out, Piketty's work, inequality is becoming politically a very sensitive issue. Inheritance tax is, as Akerlof is also pushed for, is being touted as one of those ways of reducing inequality in many countries. So what implication it has for an experiment if you do intergenerational, I'd be very curious to see. The second is, while we see the impact of performance and compliance, it would be equally interesting to extend this to see what the impact of compliance is on performance. For instance, do we have moral hazard? Do we have incentives working for the detriment of the society as a whole? If our tax rates, in fact, do go very high, do people then begin to shirk, not through taxes, but just why would I work? So that sort of ties in with Mudit's comment. But I really want to, first of course, compliment you on this study. It's very compelling, so it's very difficult to, pull hairs, particularly in experiments because, the causal link is so well established that for empiricists, there isn't much to argue against. But I would, given the nature of this audience, I would like to, in fact, go back to one of our earlier work on cheating. And the context there was parking behavior. Where we looked at in New York City, diplomats at the UN and every country is represented there, they had immunity from parking violations. So you basically parked wherever you went and you didn't have to pay. So you had abundant violations. And then suddenly in 2005, the New York City basically said, that's it. So they stopped and you had to pay. So the first was what happens when you are enforcing a rule versus leaving it to people's judgment. And then you saw a very significant 60% decline in parking violations. So enforcement of laws leads to lower cheating behavior. And that was very compelling. Of course, there was an earlier study which linked this to people from different countries having different cultures of cheating. And we have the Culture Corruption Index by the World Bank, which says that certain countries are more amenable to cheating. And we call it's a culture of corruption. So India rates very highly in that, and Scandinavian countries, for instance, are very low. But then if you look at certain other indices, and part of the reason we picked out this study to scrutinize further is culture becomes a very lazy argument for everything. You can throw many things into culture and you don't know what the policy recommendations of that is. So we started looking specifically at government effectiveness. Can better government effectiveness, and I'll tell you how you measure it, can that describe cheating behavior of a population? So the government effectiveness basically is measured by the quantity and quality of government, public services. So the nature of the civil services, what kind of public infrastructure you have, which are nicer for economists because then we know these are levers in the policy recommendation that you can tie to reduce corrupt behavior. And we were able to establish a very strong relationship between government effectiveness and this corruption, the performance of citizens in a country. So I compliment you, Ray, for a very, very good study. It's fairly robust. You've done all the bells and whistles that we do for the paper, so it's good to go, I guess. Thank you.
Thank you. Any final observations? So let me close with a telling anecdote. I just realized that 30 years ago, I took a course with Martin Feldstein and Larry Summers on public policy. And in the very first lecture, I remember there was a fellow student from Indonesia who asked a very embarrassing question. So he said, Professor Summers, in this course, will you cover tax evasion and cheating? This was 30 years ago, right? Which tells you, how long ago that was. And there was an embarrassed silence. He said, no, we don't. The no was very long. The implication was that these things are probably not important, or, it just didn't occur to economists to really properly study cheating. And what is interesting is how far we have come. And that these concerns are now central. They were sort of an embarrassed silence 30 years ago. And today they are front and central to our concerns. Planck famously said, science proceeds funeral by funeral. I think some funerals were long overdue. Thank you very much indeed.
Thanks.
Thank you, everybody. This has been a really interesting 1 hour.